Well, good afternoon, everyone. This is Scott Thompson, and we are here for another Stock Investing for Beginners webcast. Very excited to be here with you today. I don't know if you've been wondering about AI stocks lately, but today there's been some pretty big movement on some of the AI stocks. And so we're taking a look at those today. We'll also take a look at managing our open positions in our two green arrow trade strategy. But before we get started here, let me give a quick shout out to Jay Richardson and Ted and Scott and Greg and Wiley and everybody else that's here today. Appreciate you taking some time out of your busy schedule to be here. Barb's in the chat. If you have any questions, feel free to chat those in, and Barb will take a look at those, and I'll also review those myself and might post some of those in the YouTube comment section in this session that should be archived shortly after we finish today. But before we get going, let's go ahead and go over our important information. Remind everybody that the material that we cover today is for informational and educational purposes only, not a recommendation of any particular strategy or any stock that we look at today. They're just meant to be examples. We will be using the paper money version of Thinkorswim, so there's some significant differences between the paper money and the live trading. We'll be talking about stop orders today as usual. There's no guarantee that the execution of a stop order will be at or near the stop price. Please remember that all investing involves risk, including the loss of principal. And we'll be looking at a few stocks today, at least one that is a ADR. That's an international stock that trades on the U.S. markets. International investments involve additional risk, which include differences in financial accounting standards, currency fluctuations, geopolitical risk, and so on. So be aware of that. Let me go ahead and share my screen. We're going to take a look. I want to just review, show you where our playlists are for this webcast. If you go to the Trader Talks Schwab Coaching webcast page and just scroll down, we have 8 lessons that we cover regularly in this webcast. Well, not regularly, but 8 lessons that we've gone through. And so I would recommend, if you haven't watched those, go back and watch these lessons 1 through 8. It lays a great foundation for what we've been doing over the last several weeks, which is implementing some of the strategies that we taught, particularly in lesson 4 here a few months ago. So that's on that home page there, Stock Investing Basics. And then all of the webcasts that we've done are listed on our playlist page. If you click playlist, scroll down to right here, our whole Stock Investing for Beginners playlist. You can watch the full playlist there on this page. So just wanted to show you that before we get going. Let me go ahead and share my Thinkorswim platform. And we've been trading and implementing basically 4 different trading plans. One of those plans we buy every single day, and this is something I've been doing since June 9th of last year. We invest $7.24 in an ETF that tracks the S&P 500 and the NASDAQ 100. It's just a way to, kind of get the ball rolling. I wish somebody showed me this when I first was, in high school even, or coming out of high school, turned 18, and, I didn't know anything about investing. But this is an easy way just to build up some habits. Ironically or interestingly, the first several months that we were doing this, the market was going up very strongly. So I was dollar cost averaging, but the average price was going up. And so, but with the market pulling back lately, we're actually losing a little bit of money on this particular strategy. The net result right now is that it's negative. And so that was kind of interesting with the market pulling back. We've also been doing another very systematic plan. If you have some money you can invest every week or every month or every quarter, we're doing a weekly investment of $50 each week in the top 10 holdings of these tracking ETFs that, have been really popular. A lot of the, high volume tech stocks are in those 2 indices. And these are also down with the market pulling back. We went negative about a week ago on those. So we're net down on both of these 2 strategies. And then strategy number 3, we introduced several months ago, called 2 green arrows. We use a 50-period or simple moving average, a MACD, and this is that portfolio. We've been trading this for a long time as well. And then just a month or 2 ago, we introduced a crossover system. And so we have a few stocks there. None of those are doing too well because the choppiness in the market. We've gotten some valid entry signals, but haven't really had any time for those trends to take place yet. So anyway, What I wanted to do first today is just go through our open positions, the scripts for these two columns that I have listed here are just real convenient. This column here shows if the stock's above a 50-day moving average. This one here shows if the MACD is red or green. And so, you can look at this real quickly and see which stocks are below the moving average. And those are typically the ones that need a stop adjustment. So I wanted to go through, we actually have 6 of them. J&J, I think, gave a red arrow yesterday or a couple days ago, and so that one's back above the moving average. But I wanted to show you how I adjusted the stops, because one of the things that's really critical when you're adjusting stop orders is to, give yourself a check question. We have a rule. Our rule is if the stock closes below the moving average, then whatever the low price that day on that second red arrow, we set the stop 3% below that low price. But sometimes, there's going to be support in that neighborhood. And so a general rule of thumb is investors and traders generally will like to set their stops or maintain those stops below support rather than put it a few pennies above support. The reason is because, it doesn't make really sense to get stopped out if the support's going to hold. If the support breaks, then it makes sense to maybe get out of the trade. So there's a few of those, but I want to look at those first. So we'll start with D&D. I'm going to shrink off my left side here so we can just have more space. So DD DuPont here gave some red arrows over here on this day. This was actually back on the 6th of March. I drew a little support line off of this low on the 30th of January. And so again, when you see this little yellow dash line, that's hard to see on this case here because I've got so many things going on, but that yellow dash line is basically where the rule says to put the stop, and the order, of course, is where the stop actually is. But what I did is I just took my support level, and then rather than go 3% below the low price of 44.27, I thought, well, that's pretty close to that support level. I'm going to go ahead and move my stop below support, and that's what we did here. So that's where the stop is at 41.79 on DuPont. Came really close to getting stopped out here. We would have been stopped out if we followed the rule exactly. But I've talked about this many times. When you set your stops, I always ask myself, does that stop make sense? And to have a stop literally within pennies of a support level, to me, doesn't make a lot of sense because there's always that little wiggle around that support area. So, fortunately or unfortunately, we're still here in DuPont. We didn't get stopped out on that little pullback, and it looks like it's trying to get back above the moving average. So that's on DuPont. Again, if you have some questions, go ahead and chat those in here. The next one's GILD. This is a stock that dropped below the moving average. So you can kind of see here on the 18th, we actually traded below the moving average, but it closed back above. There's no red arrow there. The red arrow happened the next day. Let me change my drawing tool here just so it's a little easier to see my cursor. You can see the arrow right there. That's the day that we closed below the moving average. So here's another little nuance, okay? In this case, let me zoom in here closer. But you can see, like, the day we got the red arrow, the low of that day is actually a little higher than it was the day before. So again, this is one of those nuanced check things that I like to do when I'm looking at this 2 red arrow stop adjustment signal is, if I put my stop 3% below the low price here at 140.12, I'll have a little bit higher stop. And so I'll look at kind of the low price in that neighborhood of the 3 red arrows. Most of the time, 2 red arrows, that red arrow day is going to be the low day. But in this case, we had a little bit lower low. That one's 139.23, and I put the stop 3% below that one. I think 135.05 is where the stop is right now, if I did my math right. All right, so that's taking a look at GILD. Johnson & Johnson, like I said, had a red arrow here yesterday. So on this one, the stock had made a new high, pulling back. We closed below the moving average, even though that's a green candle. That's 2 red arrows, right? MACD's red. Stock here's below the moving average, so that's red. The low price yesterday was 234. The support areas that I see are actually above that low, so that didn't really come into play. And so this stop, we moved up to 225.27 on J&J. Again, just this one's full on following that rule there. All right, so that's Johnson & Johnson. Johnson & Johnson. A couple more to look at real quick. MU. MU's been pretty volatile. We got two red arrows back here on the 6th of March. The yellow line is where the stop would have gone based on the rule. I set the stop a little bit lower below that support level at 363.90. And we got red arrows again here yesterday. We had a breakout. The breakout basically failed. And now we have two red arrows here. And the rule says to put the stop 3% below yesterday's low, which would have given us a stop at about 377.24. But again, for me, I see that pretty good support at that 363.90 level. And so for me on something like this, where again, the support's fairly strong there, we've got a couple good strong touch points in that area. It looks pretty solid. I don't really want my stop above that support level because it would make me mad if I got stopped out at say 363.95 and then it trends back up from there. So I'm leaving the stop below that support area, and that's kind of the idea behind stop adjustments. And that took me a while to learn that because I was always getting stopped out of stuff, and then I wouldn't watch it for the new entry opportunity, and then I'd get really mad at myself because like 6 months later, the stock's up 30, 40, 50%, but I'm not in it anymore. All right. So that's MU. Walmart was also one that we had two red arrows here. A couple days ago, that low price was 121.83. The rule, if I did my math right, was to put the stop at 118.17. And I took a look at this old resistance here and drew a line. I think someone could have drawn a line off of this low at about 115. So that support area, resistance area is about 115 to 117. And I think I put my stop 3% below this 117.45. So, the trade-off, of course, is we're giving up a little more potential profit here if we get stopped out, but the advantage is we're giving a little bit of breathing room. We can maybe avoid getting stopped out with support holding, and if the stock does go back up, then we'll just continue to trade the rules. All right. The last one I wanted to look at was RTX. This is one that gave a couple red arrows a few days ago. The rule here, the low price on this was 196.49, and I think I did this one. That number doesn't sound, let's see, 196.49 times 0.97. That's 190.59. Yeah, so I put my stop 3% below that low price there. There is some support in this neighborhood, and we could have put it a little bit lower. RTX is interesting because we've got a nice little profit on it. So, the stop is actually above our purchase price, which is always kind of fun to get to a point where you can do that. So it came really close yesterday. If it continues to go down, we'll be stopped out and we'll still have a gain on it, but we have given back some profit. All right. So that's taking a look at our open positions here on our two green arrow system. Now, what I want to do is very first off, just mention that, AI, artificial intelligence, has been this really hot topic for quite a while. I remember, several years ago, NVIDIA, who's, one of the big players in the AI space, was just starting to get into the AI, and they were doing some stuff with autonomous driving and other things, in their software that they were developing. This is several years ago. And so this morning or yesterday, I actually was thinking, well, I wonder what AI stocks are out there. And we don't really have an AI stock search. So what we do have on Schwab.com, you can go to the Schwab themes. I don't know if you've heard of that, but Schwab themes, if you type in Schwab themes in the search bar, it'll come up. But they do have an AI section, and there's 25 stocks in that list of AI or artificial intelligence themes. And so kind of using that as a foundation, I went out and scoured the internet or the interweb. If you watch some of the, what was it, Top Gear, those guys called it the interwebs. But I went out and just did some searching on my own. Now, The watch list that I created, I can't share that with you, but you can do the same process that I did. You can go get that 25 stock list on schwab.com in that AI investing themes, and then you can search the internet. But I will show you the watch list that I created. So on MarketWatch, I just created a watch list called AI stocks. And one of the things I thought was really interesting is that a lot of the stocks are in the information technology that we can kind of see over here. But there was also other industry groups and sectors represented. You know, there's some consumer discretionary, Amazon, you guys are familiar with that, AppTV, Aptiv, industrials, AV. I had no idea what this company was. You know, we have some utilities, Constellation Energy. I'd seen that symbol before, but what I did, these stocks are basically, if they're involved in AI really in kind of any way. So a couple of disclosures here. Number one, these are not recommendations that you invest in any of these. The other thing is, I don't know how much involvement they have in AI. Just when I was doing the searches, these are the stocks that came up. And they might be developing AI, they might be using AI for their different types of activities that they do. And it's not necessarily a comprehensive list. There's probably other stocks out there, and I just got tired of searching. This ended up being about 70 different stocks. But one of the things that's kind of cool is, you know, you saw those different industries were coming up. You know, we had real estate, healthcare was in there, industrials, communication services again, and then down here at the bottom, you know, you're probably familiar with some of these. There's a financials, TWLO, Upstart, Workday, but some different stocks in here. And so what I did is you could use the searches that I created and shared with everybody several weeks ago. You could run the searches through here. There were enough stocks on this list that if I add that above the 50-day moving average column here, I'll show you what it looks like. But the challenge is that we were getting like too many stocks, and it wouldn't give me a data point for all of them. So I'm going to add that there. But what happens is sometimes it shows this like what's called custom limit is exceeded is the way that they have it. You know, it just says limit exceeded. So that's one of the reasons I didn't have that column on there at first. And then you can sort by this column, and you can see which stocks are below the 50-period moving average. So if we're using our 2 green arrow, you know, investing plan, the ones that are below the 50-period moving average wouldn't be a buy signal. All right. There are several that are either fairly new green arrows. And so what I did is I took a look at I looked at every single one of these a couple different times today, and I've picked 5. There's 5 of these AI stocks that I thought were really interesting. And these are going to vary from, you know, fairly expensive to some that's really, really cheap. That's like a pure speculation play. But I wanted to go through this together. And one of the common questions that people have been asking me is like, well, when do we get out of this? When do we take some profit? So what I thought we would do on this one, because a couple of the stocks we're looking at had huge breakout moves today with huge volume, and they're up, you know, double-digit percentage-wise today, is I wanted to show you a technique where we'll try to leg into a full position. We're going to invest up to $1,000 in each one of these in our small stock investing for beginners kind of mock portfolio that we're using. And so the very first one I want to look at, and then we'll go through several examples today and take a look here. So Marvell, let me give you again, this is our normal 2 green arrow chart. There's a link in the description. If you want to load this chart onto your own Thinkorswim, you can do that. But it's a 50-period moving average, a 1% moving average envelope here in purple. I have the volume on here today, partly because a couple of them have some really big volume spikes as well. And then we have the MACD there at the bottom with the green arrow. So most of these, well, 3 of these 5 have a pretty big breakout move. So one of the things that kind of was really hard for me to do when I first started investing was to buy at this new high. just was so hard to make that decision. Well, look at that. The thing, it's up 6% today, 6.5%. And I would see the buy signal, based on the rules that we created, right? 2 green arrows, the moving average is rising. So this is a valid entry signal based on the plan that we've been trading for almost, about 10 months, right? But here's the challenge, right? What if it pulls back? And then you start feeling, I shouldn't have bought everything there. So what I want to do is, first off, this stock's about $98. And so you guys help me out here. I'm going to be asking you some questions and would love some participation here. So get your fingers loosen up and running. But we're going to invest up to $1,000. So if we invest up to $1,000, how many shares could I buy if I bought all $1,000 worth of Marvell today? So check, put that in there. All right. So, with quick math, that looks like what? Probably 10 shares that we could go in with. Yeah, about 10 shares. So here's what I want to do. I want to buy half the position right now. Like, I'm going to set up 2 orders. I'm going to set up an order to buy half of our allocation here at the closing price today. I'm going to set a target on all of these. And some of them will sell half at the target. Some of them will sell the whole position at the target. But we're going to set up 2 orders on Marvell, okay? Now, this one, we're just going to use our normal 1% below the moving average stop. So if I put my cursor there on that moving average envelope, you can see it says 82 there to the right. That's where our stop's going to be. So I'm just going to do 2 orders. We're going to go 2 orders here. And then I'll show you another chart here that I want to use for the targeting. So I'm going to do buy custom with OCO bracket. We're going to go with 5 shares. We're going to lock that link up. So we're going to buy 5, sell 5, sell 5. And we're going to go in there with a limit price at the close. So 98.45. We're going to have our stop, we said, was at 82. That's 1% below that moving average. Now, how about the target? Let's shrink this down for a minute. Let me go out here, and you can't see it on this chart, but if I drag it down a little bit, I have some yellow lines on these. These yellow lines, I like to do a solid yellow line when it's a resistance or support area that's longer than a year ago. And so let me just go out to like a 3-year weekly chart. So we had a 3-year high back here in October, or what is that? That's January of 25, up there about 126, 127. And so what I thought I would do is I'll put a target to sell all of the shares up there at that basically 3-year high. So in our order then, I'm going to use that yellowish line or orangish line as my targeting. So 126.15. And we'll make all of these good till canceled. We'll lock those up. Okay, so this is order number 1. I'm going to go ahead and send this one off. Okay, so we'll hit confirm and send. And then we want to review the order. Buy 5 shares there. We're going to buy half our position, half of that $1,000 allocation. And then we have a target at 126. Why a target in this case? Just because, this market, this AI sector tends to be a little bit more volatile. If it goes up there and hits the target, we'll take some profit up there, okay? The stop here is just simply based on our rule set. Now, I created a group called AI stocks, so I'm going to go ahead and put that down in that group. We're investing about $500, which is about half. A stop order, of course, isn't guaranteed to get filled at 82. That's just going to trigger a market order, could be filled significantly lower than that, and then we'll send this order off. Now, what other method, though? Let me zoom back over here. Well, let me change this back to like a 3-month chart. So let me throw some ideas at you that, I wish I knew when I first started investing. One of the things that's pretty common, in fact, it's probably about 70% of the time, when you get a real strong breakout like this, the stock will go up for a little while, and then it will come back and test this old support resistance area as the new support. So it was resistance over here. We've broken out there with some decent volume, and it might pull back. So what I wanted to do is I wanted to set a limit order down in the neighborhood of where we think it might pull back to, and then use the same stop and targeting that we had before. And so some people might go like halfway through the green candle. That tends to be a potential support area. I took the highs over here, which were at 95.05, and then 93-ish is kind of where most of those touch points over the last couple months are. So there isn't really a right or wrong place to put this. It's just that the lower it is, the less likely it is that this order will fill. But I'm going to use this old high with the idea that maybe over the next few days it goes up a little bit more, comes back and tests that old resistance as new support, and then makes a run at making new highs and starting to trend up again. So I'm going to put my cursor right there about 95.05. We're going to do a buy custom with OCO bracket here again. And then we're just going to go 5 more shares. Okay, still about $500. We're going to go in there. Let's make that 1 penny less there on that one. Our target's still going to be 126.15, that old high. And then our stop's still going to be at 82. And these will be good till canceled. I don't know when this will fill or if it even will fill. Okay. So again, trying to buy 5 more shares, essentially legging into a full position or scaling into a full position with the idea that maybe the stock pulls back a little bit. We get filled a little bit better there and take that position, put it in AI stocks. And that'll put us about that full $1,000 if both of those orders fill. All right. So that's kind of the name of the game today, is we're going to be kind of legging into some of these as we go through looking at some of these nice AI stock breakouts with some decent volume. Okay. ARM's the other one. Let's take a look at this. ARM. These are all off that watch list, or that watch list I showed you a moment ago. And I created it again for you, those of you that just joined. I created it by just looking at the internet, asking for AI stocks and things like that. All right. Now, how about this one? ARM. Okay, this is an ADR. Again, the international stocks have those kind of specialized risks. Be aware of that. But check this out. This thing gapped up, huge volume spike here. The stock ran all the way up to 166.69, and it's pulled back a little bit. And so I want to do the same process here. First off, let's ask, well, how many shares can I buy at 157? Well, that's going to be about 9 shares, right? Or actually, no, it'd be fewer than that. It'd be 6 shares. It's getting late in the day. Brain's not working too well. So 157, let's do $1,000 divide by 157. So yeah, about 6 shares. So we're going to go in with 3 shares on this one here. We're going to go 3 shares on this one. Let me shrink this down a little bit here. And you can see that yellow line. Again, that just represents an old level of resistance. This one that's black here is one that's more recent. I can show you that one real quick. 6 months. We just had the high over there about 183.16. And kind of neighborhood. And there was another line before. But so the targeting area, I just chose kind of a random, that line that I've got drawn in there, 183.74. You could do a fib extension. You could do, the closing price over here was about, 178. So kind of that range between about 178, 180 up to about 188. You're probably going to run into some resistance up in that neighborhood. So that's where the target will be there. This is another one where we're just going to put the stop. We'll go 3%, I think, below the 127.03 is what I did on this one, because it's gone up so much over here. And if I did my math right, let me just get my calculator here. So 127.03 times 0.97. So 123.22. Yeah. So that's what I chose for this example here. So I'm going to go ahead and right click, buy custom with OCO bracket. We said we could do 6 shares. So we're going to go 3, we're going to buy half at the current close. Okay. We're going to put the limit order there at the closing price, 157.07. We're going to put our target, we said, was 183.74. And our stop was going to be 3% below that 127.03 support level, which is 123.22. We'll make those good till canceled. So hit confirm and send. 3 shares, 471, about half of the 1,000. Stop at 123, not guaranteed to get filled at that point. Target up to about 183.74. Put that in our AI stocks. Send that off. Now, how about this one? Where would someone consider putting a limit order on this one? Well, let me give you just some additional technical analysis type of ideas, all right? So we have a gap up, gap up on huge volume here on ARM. So halfway through a big candle or the body of a big candle, sometimes people will look at that area as potential support resistance, okay? So that might be there about, what is that, 153 or so. The bottom of a gap up, so the low price today, which is at 148.25, that's the low of the gap up day. That could be a support area. And then another common one is kind of halfway through the gap, and that's about where this 143.32 line ends up being. So what I did here is I'm going to put a limit order to buy this at the bottom of the gap, or at the bottom of today's gap, maybe the top of the gap, if you think about it that way, but it's the low price today at 148.25, and then we'll use the same target and stop as that one. So put your cursor there about 148.25, do a right click, buy custom with OCO bracket. Okay, we're going to adjust our entry price. And again, these limit orders, there's no guarantee that these will fill. The idea is that because it's broken out, it's very common. About 70% of the time, the stock will go up a little bit, come back and try to find a new higher low somewhere. And we're guesstimating where that might be using some technical analysis ideas. All right. Our targeting again on this was 183.74. And our stop, we said, was 123.22. And we're going to go in with 5 or 6, 3 more shares if that pulls back. So we hit confirm and send. So 148.25, again, looking for a little bit of a pullback into that gap low or the low of the gap up day. Targeting the same kind of based on some resistance area. Stop 3% below that support at 127.03. There's our AI stocks group. Okay. So there's ARM. Let's take a look at, this is the speculation one. I want to get this one done just in case we don't have time to go through all of them. But this one, I don't know if anybody's aware of this stock. KSCP. So before I hit enter, is anybody familiar with this stock? Nightscope? Maybe chat in a yes if you've seen that. Now, this one to me was really interesting. Number one, it's interesting because it's a really, really low price stock. And I don't generally like to, look at these low price stock as investments per se, just because they're so volatile. And so I'm going to tell you right now that on something like this, most traders and investors just plan on losing the whole investment. Okay. So if you're going to go in with 1,000, you need to be careful losing the whole 1,000. Okay. Because we just don't know. But here's what's interesting. Check a look at this. I went out and looked at a 15-year chart on this one. And look at the price here. So, this has been around for a long, long time. And there was a spike. What was it? $400 there. And so, as I looked at this, I actually went and asked myself, well, why did it drop so much? And so this was kind of one of those stocks that got caught up in that, what I'll call a internet-like bubble, like back in the 2000s, if you were investing back then. Let me pull this down a little bit over here. So what happened, and this is back in 2023, they missed on their earnings, and then I think they guided lower, and then they were having a lot of trouble, but it was kind of like internet bubble-esque type of thing, and the market really just tanked on this one. And so, it came all the way down here to 292, basically almost went out of business. It looks like these guys got so low in price that it just isn't attractive usually to other investors. So why am I bringing it up here? Well, today they got some good news. They did what? 4 million shares today. That's how many shares traded on this, when the average was probably closer to about 500,000 shares. Look at that average over here, just ballpark. So they got huge volume today. Now, why did they get that? Well, it looks like they got some contracts opened up to them. And you guys can go research this on your own. But usually when there's a volume spike like this, investors look at those volume spikes as potential interest from institutional investors. Now, I'm not saying that that's what's happening here. I don't have any idea who's buying this right now, but the news looks pretty good. Even if you didn't know anything about the news, when the stock is up and closing near the high for the day, that's pretty good news day for any stock. They have huge volume here. They had a lot of resistance here at about that 441 level. So I wanted to do something on this one very similar to what we've done before. And, I'm going to zoom in here on this section. Oops, let me just go back here. Auto, and let me go out to a 3-month chart. There we go. All right. So we had some resistance at 501, and that obviously was broken today. We had some resistance there about 441, and that was broken today. We have some pretty good support at about 369. We have our 2 green arrow buy signal here. The moving average has started to tick up. So all of these basically have the green arrow buy signal based on the rules that we've been trading for months. But this one's really, really high. It's up 23% today. And I know a lot of people are like, well, I don't want to buy it up that high. I'm going to wait for it to pull back. You guys ever done that where you've seen a big breakout move on high volume and you thought, nah, I'm going to wait for it to pull back, and then it never does? You guys ever seen that? So one of the reasons I wanted to teach this concept of going in with half a position today, looking for some pullback opportunities, is to, not miss those breakouts. In fact, probably if 70% of the time it comes back and does a little bit of a pullback and finds some support somewhere, that means about 30% of the time it doesn't do that. It just keeps going up, and then it finds some support up somewhere higher, right? So, this is one of those things that just drove me nuts when I first started. I hated that. And so I thought to myself, well, I want to share that with everybody today, and, not only find some stocks that had some good breakouts on some volume, but to show some techniques that might be helpful for you. And we're going in with half a position. You don't have to go in that much. You could go in with like a third or a quarter of the position. I've used the term dip your toe in the water before, because there's nothing more frustrating than seeing what's considered a valid buy signal based on whatever rule set you're trading, but you don't take the trade for whatever reason. Now, a lot of that can be handled by just making sure your risk is good. Like you want to be really comfortable losing whatever you're putting at risk. And in our case here, $1,000, that's a pretty big loss for most beginners. We have a stop that will hopefully get us out near where we set our stop, but there's no guarantee for that. But you can kind of see with the number of shares that we're buying, we bought in 3 shares or 6 shares or 9 shares. This is going to be a little bigger because we can go in there. If I had $1,000, I could go in with how many shares on this? 1,000 divided by 5.20 is where it closed, it looks like. So we can go in with about 192 shares if we divide that by 2. So we can go like 96 shares on this. So we're going to do that same concept. We're going to put an order to get in 96 shares. We're going to set our stop 3% below this 369 level. And that's going to be about 357. And then I thought what we would do is we'll just use this first kind of resistance area, which I think is back in the last year or so. Yeah. Well, actually, it's on October of 25, and then there's another one up here at 1014. But I thought what we would do on this one is we'll sell half up here at this position, and then maybe shoot for the other half up there. Okay. So let's go ahead and let me zoom back in here. So 6 months, we're going to right click right up here, buy custom with OCO bracket, and we could go in with 192 shares total, but we can go in there with 96 shares for half. And so we've got it locked up, 96 shares in there, about 520 to close. And then we're going to set the target. Now this one's going to be interesting because we only want to sell half. So I need to unlock this link if you've had it locked up here. We're going to go in there with 48 shares, okay, on that one. And if you're buying 96 like this, and I know Ted's probably got some different ideas here. Ted, I remember we had a conversation, and there's probably another way to do that. I just couldn't think of the easier way to explain it. But so if we're going to buy 96 shares and it just moves against us, we want to get stopped out of all 96 shares. But if we get into 96 shares and it goes up right away, we only want to sell half at our target. So that's how this order is set up. So we're going to go in here at 740. And then our stop, we said that is 3.57. That's 3% below 369. So these will all be good till canceled over here. So that's that first order. The idea again is we're going to buy now. I see a question about why not just wait till it pulls back? May not pull back, you know. And if it does pull back, then I'm going to add in some shares. So I'll show you that order here now. Okay, so hit confirm and send on this first order. 96 shares. We're going to sell half at that 740 target. We're going to get stopped out of all of it if it goes down to 357. And if that happens, then of course that's an OCO. One cancels other. So if either one of these fills, it'll cancel the other one. And then if it does hit the target, then we probably want to reset the stop on the remaining 48 shares, right? So let's put this on our AI stocks and we'll send this off. Okay, now we also want to maybe buy it if it pulls back. Now on this one, you know, I think 441 would make sense as a potential limit order. I'm going to use halfway through this candle. So I'm just kind of eyeballing about halfway and I put my cursor there. And you can see that, look at the Y value just right over here on the left side. With my cursor right about midpoint through that big green candle, which technically is a potential support area, it looks like 476. So I'm going to right click there, buy custom with OCO bracket. We have 476. We're going to go in here with 96 shares. This one will also have 48 shares to sell and then 96 shares to sell if it hits our stop. And we just plug in the numbers, okay? 357 on this one. And the target we said was 740. And make those good till canceled. So buy 96, again, if it starts to pull back and it only goes halfway through the candle, we're going to try to pick some up at 476. If someone wanted to go lower than that on their limit order to add, that'd be fine. You know, just the lower it is, the less likelihood of getting filled. We have an order to sell half of those shares at the target of 740. And then we have an order to stop out of all the shares there at about 357. Okay, and so that would be an AI stock as well. All right, we'll send that. So that's kind of how this works, everybody. We've gone through some of these AI stocks here. I had a couple others that were on that list, so I'll give you some homework to, you know, search through that list of stocks and see what other ones might have a buy signal based on our 2 green arrow rules. We're just out of time today to do that. Let's see. And then, you know, what we did is, I'll just go back over here. We put several orders in on our positions here. So come, those aren't here. There they are. So we have several orders. KSCP. You know, this one again, highly speculative just because of the price of the stock. ARM, that's the ADR that has some of those international, additional risks, geopolitical, currency risks, all sorts of things there. And then Marvell, as we place those orders to get that. So hopefully that's helpful for you. Create your own rule sets that you feel comfortable with. I highly recommend paper trading, whatever rule set you have about 10 or 20 times, and then going back and evaluating, how that rule set has worked for you. And hopefully that's helpful, everybody. Have a great day. Thanks for being here, and we'll see you next week. Thanks, everybody.